Hello and welcome to the World Built Environment Forum webinar series. My name's Simon Rubinson and today we're discussing the results of the Q1 RICS Global Construction Monitor. To help me make sense of what's going on in the construction market, I've got an excellent panel consisting of, and I'll just introduce them briefly and then we will come back to them once I've done a quick summary of the results. So first of all, we've got Anne Bentley. Anne's Global Director of Ryder Levitt Bucknell. She's a member of the UK Government's Construction Leadership Council. She's also a fellow of the RICS, a visiting professor at Birmingham City University, and has over 35 years experience in the sector. Secondly, we have Massimiliano Poulis. He's managing director of Arcadis in Italy. He's a civil engineer with over 20 years experience in the sector. Has a focus on program management and strategic procurement of international real estate infrastructure and manufacturing projects, and he's also a member of RICS and the Italian Professional Association of Engineers, amongst other bodies. And finally, today we have Tammy Stockley. She's Associate Director with Altus Group in Canada, and she has over 28 years experience working on projects in both the public and private sector. She leads the Atlantic team in specialising in pre-construction estimating and project monitoring. She's a member of the RICS and the board director for CIQS, that's the Canadian Institute of Quantity Surveyors. And I must just at this point just deliver a bit of thanks to the CIQS. They're a partner in delivering the responses that we get from Canada. So a big thank you to them for continuing to work with us on this survey, which is a really good way of capturing sentiment amongst professionals working in the construction sector in many countries across the world. So what I want to do now is briefly summarize the results of the survey, and then I want to go to each of the panelists, get their initial thoughts as to what they're seeing in the market, and then perhaps widen that out to have a bit of a discussion. I've got some questions lined up for them, but I really would like to get your involvement as well. So please do fire off any questions, and we will really endeavour to get to as many of them as possible over the course of the next hour. And I should actually just apologise for starting this webinar just a little bit late, so apologies on that front as well. But let me just quickly run through what are the key conclusions of the Global Construction Monitor for Q1. Now, just to remind you, this is a sentiment survey, so it's designed to capture feedback, not hard data, and as such, it's sort of not necessarily aligned to some of the official statistics that you'll see, but we believe, and we've got, there's certainly evidence to suggest that sentiment's a pretty good lead indicator of some of the hard data. So if we were to look at the first of the slides, which is really a summary of the headline results that we received. And what you can see here is what's called the Global Construction Activity Indicator for each of the broad regions that we look at, so the Americas, Asia Pacific, Europe and the Middle East. And I've run these for the last 4 quarters. They're a mixture of different component indicators from the survey, so they will include some of the current indicators, whether it's workloads, and some of the future and profitability and employment, and some of the future indicators as well. So it's a real headline summary of what's going on. And what you can see from the feedback that we're receiving is that in each one of these broad regions, sentiment, it has picked up in Q1 compared with where it was in Q4, and indeed it's better than Q3 and Q2. Now, probably you're not surprised about this, because I think there's generally a sense in most parts of the world, and certainly not all, because we know that COVID is still wreaking havoc in some parts of the world, but you can see, that certainly there is a feeling that the global economy is slowly emerging from the pandemic. It's not necessarily going to be a straight course out of it, but if you look at the sort of the numbers that the IMF are producing at the moment, they're upgrading their macro expectations for this year and next. Perhaps it's not surprising that people operating in the construction sector are suggesting that they're seeing a better feel, a better tone to what's going on, and certainly expecting things to continue to improve as we move through the course of this year. If we then move on to the next of the slides, and I wanted to just break down the expectations around workloads, both by the figures, the feedback around workloads, both by the current trend and both by expectations. So the current trend is really what's happened over the last quarter, and the expectations for the last 12 months and for the next 12 months. And what I've done here is look at it by country, as I say. So we've broken it down from those broader categories, and anything to the left of the middle, we're looking at it vertically. All the countries on the left show workloads where the feedback currently is in negative territory. Those on the right, so anything to the right of the US, you can see Italy, India, Germany, Canada, and the UK. So some of the countries that we've got representatives of today in that right-hand quadrant. Well, the top right-hand quadrant actually is where we're getting positive feedback about current workloads, but also about expectations. And you can see when it comes to expectations, so anything above the horizontal line, most countries with a feedback around expectations on workloads is certainly positive. So there's definitely a shift here, that the current picture is a bit mixed, not entirely surprisingly. But as we move through this year, there really is a belief, and as I said, that would be very much consistent with a lot of the macro forecasters telling us in terms of expectations around the wider economy. So moving on from this particular sort of summary, if we were to look at what are the components that are driving that improvement in sentiment, what you can see here is a picture in which the private residential market generally seemed to be quite strong, and infrastructure quite strong. And I've broken it down again by those bigger regional groups, and you can see there that private non-residential, which we're meaning more the commercial components, so perhaps not entirely surprising, things like office and retail, perhaps the growth there generally lagging. I did throw in expectations around profit margins just to show that in both Americas and Asia Pac, we're actually getting positive feedback around expectations, which I think is really good news, because we're all aware that profitability at times in the construction sector is fairly fragile, and last year hasn't been an easy year. The feedback from Europe still remains negative, although it's only marginally negative. This is an aggregate figure, remember, so there's going to be a lot of positive stories within that. But also it's less negative than it was. So the trend of the direction of travel is positive, similarly with the EMEA numbers. Moving on from this story, the next slide really looks at some of the issues which are, I suppose, in a way, barriers to development, obstructions. What is actually holding up production at the development at the present time? And I suppose what is a very strong story in all of this is we've had financial constraints on and off. That always seems to be something that comes back, and I suppose in a sense that might at times not just be about access to funding, it could also be sort of a part of a story around profitability and internal sources of funds. But what is noticeable, and again, this would not come as a surprise to anyone, I'm sure, is that materials feature large, whether it is shortages of materials to some extent or the cost of materials, and we're all aware that costs of materials have moved up pretty sharply, and that is certainly something that a lot of companies in the sector are having to grapple with. And certainly we're being told here, as you can see, it's a bit more of a barrier in terms of thinking about new projects and developments. What is also interesting is that skills and labour are being ticked by less respondents now than was the case even a year ago. And I mean, there's definitely been a shift there. That was a big story. Perhaps it will resurrect itself as being a big story as development really kicks in over the next year. If those expectations are met, we might well see the skills numbers and the labour numbers creep up, because I don't think we've suddenly had this transformation in terms of the capacity within the industry. Although again, my experts on the panel may tell me otherwise, and I'll be interested to hear their thoughts on that. Moving on, then, just a couple more slides, really, just to give you a feel for what the tone of the feedback was. So we asked about tender prices and construction costs, and remember, these are best guesstimates, they're averages. We've done it for at a regional level again, but it really does capture the essence of what we're hearing, and that is actually that tender prices are likely to rise more than was, over the next 12 months than was anticipated back in Q4. Not entirely surprising, again, sort of consistent with the macro picture. But you can also see, largely but not exclusively because of what we're hearing on raw material prices, that the expectation is that construction costs will rise at least as rapidly and possibly a little bit more rapidly, which all means that it does add up to that slightly mixed outlook for profits. As I say, looking at the net balance readings for profits, I think, and that's a different way in which we try and calculate the feedback from our respondents. So we do it sometimes in percentage terms and sometimes in net balance terms, different ways, telling us slightly different things. It sort of suggests that the picture may not be as bad as it was in terms of profitability, but it doesn't sound like we're necessarily getting to that point where profits are going to start rebounding particularly strongly. And then just moving on, I think I've got just a couple more slides, so we're almost there on this. First of all, I wanted to just check in with our respondents, and this is an additional question that we included back in Q2 2020. So really just when the pandemic was getting going, and we wanted to check in again to hear what the sector had to say about this issue. We were aware that there was a risk to productivity in the sector, and it's fair to say that in many parts of the world, the construction sector has had a problem with productivity, so it's an issue anyway. But on top of that, the working practices around the new, the new environment of COVID was seen to be a potential threat to productivity. And we wanted to get a gauge what the impact is likely to be. Now, what we can see here is that if you compare the diamonds are essentially what the feedback that we got last time, and the bars are the feedback that we're getting this time. So what you can see looking at a country level is that in most cases we're talking about hit to productivity from COVID as being now less than 10%. That might seem still quite material, but if you look at where the expectations were back in Q2 2020, you can see that generally it was rather more than that. So whether it turns out to be this figure or not, it's certainly the case that I think there's a lot more confidence that the industry has now the ability to manage the new environment much more effectively. And certainly we are getting respondents who are even saying that they think that the response to COVID has led to a change in behaviours that have actually led to positive outcomes. And some people are saying that there will be no hit to productivity. Some people even saying it could increase as a result of some of the changes. So I would draw some encouragement from this. I mean, it's not necessarily quite where we want it, but I think the direction of travel is positive. And let's just go to, I think it's now my final slide. And I suppose that one of the issues I've been discussing with some of my colleagues at RICS was whether or not we were going to see underbidding as a result of the crisis. Was the macro crisis going to lead to a lot of really sort of competitive tendering where we actually started seeing bids coming in consistently below cost? We did look at this again in Q2 of last year. And once again, I've got two figures here, actually. I've got the share of bids consistently below cost on the left-hand axis, those are the bars, and the triangles the diamonds are the average underbid. So, and that's on the right-hand axis. They're generally reasonably well correlated, though not perfectly. Now, I would say, again, these are simply the responses from our members or the respondents to the survey, and your own experiences may be different. But what it does seem to tell me is that in most cases, the share of bids consistently below cost is sort of in that sort of perhaps 20 to 30% area, perhaps going on 40 in some markets. That's what we're being told. But the average underbid, even where that is the case, is quite low. So it's not like in general that we're seeing significant underbidding in terms of price at this point. And again, I would view this as being quite positive. I would look at it in comparison with what we got Q2 last year, and I haven't got those figures on the screen, but they are generally speaking better this time round than when we saw when the pandemic first sort of really reared its head, and I think there were really fears that it could be a much more punishing episode for the sector. And that's not to say it hasn't been painful, but I think that the evidence is not there at the moment in terms of at a macro level, but we're seeing that sort of level of a race to the bottom, which I think is encouraging. But again, I'll be very interested in hearing what the panelists have to say about this, and indeed yourselves. So that's what I wanted to say. That's a summary of the results from the Q1 monitor. What I now want to do is get some initial feedback from our panelists to this, but please remember to use the question box, submit any thoughts that you have, and we'll really like to get to any questions during the course of the next 40 minutes. But let me now first turn to Anne, coming at it from your perspective. I mean, you're based in the UK, but I assume that your sort of interest extends beyond the UK. What are you, beyond the UK? What are your thoughts on the results of the survey? Do they sort of pan out with what you're seeing, or are you getting a different picture?
Thanks, Simon. No, the results do very much pan out with a lot of patterns that we're seeing. I mean, obviously, I think Max will be able to talk more about from a sort of continental European point of view, but from a UK point of view, I think that it's probably fair to say that generally both contractors, subcontractors, consultants are all probably feel that things aren't as bad as they expected them to be. Now, I know that's sort of almost like making a double negative into a positive, but a year ago, I think we all thought we were in for a pretty torrid time. And actually, of the many industries that have obviously been affected by coronavirus, construction has been affected less than most, in truth. Most companies have continued working. Of course, in the UK, we've had quite high levels of state support, both in terms of the furlough scheme, but also in terms of sort of bringing some construction projects forward and also putting guidance in place about, how clients, certainly public sector clients, should deal with claims and disputes and things. And so I'm not saying it's been perfect for everyone, and clearly most people have taken a bit of a hit. But generally, the position in the UK is quite optimistic, and now looking forward to a period of substantial growth. And in fact, the sort of key pick out points, if you like, that I would say is that, obviously one, we kept working. We are now seeing some fairly serious product shortages in certain areas. Now, that might be just as much to do with Brexit as it is to do with coronavirus. I think the two things are now intertwined, and it's difficult to see which comes from where. But we're certainly seeing some quite high increases in costs at a product level. We are actually seeing some quite serious labour shortages as well. And some of that has been compounded by the fact that there's been an increase in domestic expenditure on sort of home improvements and that sort of thing, which has it's diverted some trades from construction projects to domestic projects. But we're also seeing fairly large scale recruitment among consultancies, and we are seeing a return of what I would call the merry-go-round. So it's not so much that people are necessarily taking on hundreds more staff, But having been in a sort of a very constrained market for what best part of 18 months, we are seeing a bit of movement between companies as well. So, you know, I think we very much align with what you said. We're not seeing ridiculously low competitive tendering. In fact, if anything, we're seeing some clients surprised that they're not getting cheaper deals. But I think, again, your figures actually show that. I think some of that is probably credit to some of the government programs that have been put in place, where they really are sort of stressing that tenderers should be appointed on overall value and not just a race to the bottom. And that message does seem to be getting across, and I think your figures back that up. So generally, yes, I think you've got it about right. Probably a few specific UK issues that are slightly different to Europe, but generally quite optimistic. Thank you,
Anne. Massimiliano, I mean, what are you seeing in terms of Italy then? Does that sort of align the same sort of sentiment in terms of what's going on there at the moment in terms of the sector?
Yeah, fully. And to get things easier, you can call me Max. I think it's easier for everybody. Simon. Italy, yeah, I would say the response fully to what is the kind of trend in Europe and mainly in South Europe, as Anne was anticipating. I have to split the kind of sentiment and data on the construction market in two, mainly for 1 year and today. Well, the infrastructure market has never stopped since the pandemic has exploded in 1 year time. But on the contrary, as we saw from the charts, the residential and non-strategic construction assets were slowed down. Now, since 5-6 months, we have been mainly in continental Europe. We are talking about a recovery fund, which a lot of construction companies and public entities are really looking forward to receive, because this will definitely start a massive digitalization of construction industry, a massive push on the urban regeneration. Continental Europe, as you know, its greenfields are almost over, and so a massive regeneration of square meters or square foot is needed, and recovery fund is really looking in that direction. And last but not least, recovery fund, which I repeat is really weighted from public entities and big contractors to accelerate on the old-fashioned construction world and from the digital construction point of view. Luckily, RICS has really pushed a lot on BIM adoption, mainly UK, and that has been spread all over Europe. But now I really see a trend in adopting BIM 5, 6, and 7D approaches, and this is also pushed by an incumbent and increasing funding from the European Union. Last but not least, the kind of attitude and approach that I see on the market is a growing cultural approach from the public bodies. It would be strange to say, but I see it mainly in South Europe, which Italy, of course, is part of, a really growing and accelerating cultural approach in project and program management from the public bodies, project managers. And this is really welcome, because investors and public entities may speak the same language.
Okay, that is good news, and it sounds like the whole thing's becoming more professional as part of the process. I'm on that recovery fund. The money starts flowing later this year, does it? Really? Is that correct?
Yeah, it's correct. But a lot of institutional and non-institutional funds are already accelerating on spending money, because either directly or indirectly, they know that we receive a kind of positive flow. Yeah.
Okay, thank you. And Tammy, what are you seeing? And I suppose, you know, it's really interesting with Canada, because I suppose although you're sort of focused on the Atlantic side, but you know, it's such a diverse market. I'm just wondering what you're seeing and whether how that varies across the whole country, whether you've got any sighting of that.
Yes, Simon. Well, obviously, yes, given our large geographical span, there's varying concerns across the provinces and territories of Canada. We are seeing, obviously, trends that do correlate with the survey. Obviously, labor impact with shortages of immigration workers coming into Canada. That's an issue now with our aging labor force. Material price increases are still impacting and supply chain disruption. There is a 12-year plan for the Government of Canada for investing 180 billion. So we're currently into 5 years in that, and this initiative commitment is gaining momentum for sustainable construction, and a lot of people in the construction sector are jumping on the bandwagon in regards to availing of this funding. So we see that as a positive trend going forward in the construction industry. And like I said, the survey results do correlate closely to what we are seeing across the major sectors of Canada.
And just sort of perhaps continuing with you, Tammy, I mean, you know, I mean, wherever we look, I think there are great commitments from governments towards infrastructure. And I don't think Canada, you know, going forward, and I don't think Canada, I don't think is any different in that. But I suppose that, you know, certainly coming from the UK, there's always a debate about whether or not, you know, and Anne might have her own views on this, but there's always a debate about whether infrastructure really delivers, you know, both in terms of the benefits that it promises and meeting, you know, the timelines and the cost projections. I mean, do you think that, you know, the industry is ready to take on what's being asked of it? Because I suppose it is being seen probably quite globally as part of the recovery story for, you know, post-COVID, really, while also, I suppose, being seen as a way of generating a more inclusive recovery. So not just the recovery itself, but helping it to make it more inclusive. Is it asking too much of the industry?
No, I think the industry is ready to benefit from the uplift of the spending, but meeting timelines and cost projections, regulations, setting policies, standards to speed up the delivery of funding is imperative. And the Government of Canada now has an initiative out for, I think it's like a June 30th deadline. So there's feedback in regards to ways to administer and distribute this delivery of funding. So that gives input back to stakeholders in the construction industry. So I think that can be momentum in regards to benefiting how this can be administered going forward.
Okay, thank you. And Matt, I mean, what about your citing of the role of infrastructure? I mean, clearly with the recovery fund, green spending and green infrastructure is very much going to be to the fore. I mean, whether it's in Italy or wider Europe, do you think that the structures are in place to ensure delivery? I mean, we haven't got a representative this time from Germany, but I think previously we did, and you know, we always, certainly in the UK, we've historically sort of always been fairly sort of admiring of the Germans' ability to deliver on infrastructure. But then Berlin Airport probably wasn't a shining example of delivery to time. And I suppose I just wonder how, again, is the European industry prepared for this? Because I think certainly the story is a pretty strong one about the role of infrastructure in driving things forward.
That's a very good question. I can make you an example which I know very well, and where a delivery of infrastructure really works well, and is where the public and private money are going together in big concessions no matter if it's a highway, if it's a train, a high-speed train, or another in strategic infrastructure. That is something which I think we really have to push and invest on. So from that perspective, something important is happening even before the recovery fund, which is the following. I mean, we see big investment funds which are really investing in bonds, in actions and stock options for big and large infrastructures. No, not just in Italy, but everywhere in Europe. Another very important point is really to understand and to really clarify what we intend for infrastructures, because if we talk about the old-fashioned highways, tunnel, submerged tunnels, and so on and so forth, this is going where the major investor is still the state, the government. But on the other side, I would define as strategic infrastructure health and safety, safety structures like hospitals and COVID, and really taught a lot of things on how the organization of the health and safety infrastructures is really important for each country. But I see an increase in demand of strategic infrastructures, which at the end are buildings, strategic buildings, but refers to data centers, refers to gigafactories, refers to large LNG and alternative fuels storage and delivery. From that perspective, I see really an increasing demand and increasing investments, and recovery fund will accelerate on that, and mainly the ESG part of these large investments is crucial for every and each investor.
Well, I want to come back to ESG in a bit, but we'll perhaps take that one next, and we've got a question about that as well. So we'll come back to ESG, but what just as a follow-up to this, and perhaps Anne can sort of start that. You might want to say a bit about infrastructure in the UK. I know we've just started the drilling in the hills for HS2 today, haven't we? So it's certainly very relevant. But I'm just thinking about the sort of the resources in place. Do we have the skills, from say quantity surveyors amongst others, to improve performance and predictability in infrastructure, or is something more required?
I mean, that's a sort of multi-party question to some extent. So, I mean, just looking at infrastructure, I mean, one of the things about infrastructure, of course, is it doesn't happen suddenly, and I'm sure this is true around the world, but it's certainly true in the UK, that the sort of legislative framework in which certainly large-scale infrastructure, the sort of roads, railways, etc., is constructed, means that there is ample time for planning, for skills, for sort of putting social value and procurement and environmental factors into place properly. And my sort of observation of infrastructure in the UK is that to some extent, I think it has become a little, dare I say, politicised, because a lot of these schemes would have happened anyway, but they're now almost being presented as coronavirus recovery schemes, when actually they were schemes that have been in the pipeline for a long, long time. And I think that the schemes that will have probably the greater shorter term impact are the ones that Max was talking about, which are the sort of social infrastructure type schemes, maybe the slightly smaller ones, the ones that can therefore be brought to market more quickly and are more agile. And I think that one of the really big issues that certainly the UK is facing, I'm sure other countries are facing as well, is making sure that the drivers for the projects, whatever they are, whether that's to sort of move people from one city to another city, or to make people healthier in hospitals, that they're set out very clearly in terms of the other things that whoever's paying for it, the government or local authorities, want to achieve. So, you know, if you have an ESG agenda, you have to be very clear about not just how much do you want it to cost, but also, you know, what environmental impact will you accept, what social value do you want to create, what quality of product do you want to have. And I think that it's in those sort of areas where we're likely to find the greatest skill shortages, if I'm honest, because I think that when the brief is very clear, then there are plenty of people around who can estimate the cost or estimate the time parameters or you know, design the building or whatever. It's when the parameters aren't clear and they become slightly politicized that it becomes much more difficult to sort of negotiate your way through the project. And one of the things that I think all the certainly consultants and professionals in the UK need to sort of face up to is the fact that the role is probably changing, and that clients will become more reliant on consultants for broader advice at the beginning of projects. So they won't just want financial and won't just want, you know, timeliness advice, but they will also want advice on that whole, is it delivering all of these other things? Is it delivering value? Will it deliver the very thing that I want to achieve? And in that area, I don't think it's just, if you like, the consultants, so be the QSs, project managers or whatever, that probably need to brush up their skills, but I actually think it's the clients as well. So I think that we will see over the next 2 or 3 years quite a shift in training, in behaviours, in characteristics that we want in both those that are providing services, but also actually those that are buying services too. So I think we're in for some quite interesting times, and that isn't just true of infrastructure, that's true of all of the sort of peripheral social infrastructure as well.
Okay, thank you. Taking a lead from that, Tammy, I mean, do you think that, and just thinking about obviously ESG's or sustainability is coming up in a number of the comments that we've had. I mean, how well equipped do you think professionals are in Canada to address the sort of issues that Anne referenced there? And, you know, do you think the toolkits are in place to help them, or do you think that more work is required by consultants, by professional bodies, by governments as well, to help sort of provide the framework around which this can be achieved?
Well, as we are dealing with working towards net zero emissions by 2050 in Canada, I feel like it's a collaborative approach that needs to be required for ESG criteria. The skill sets and toolkit expertise, obviously life cycle assessment, risk mitigation, carbon neutral studies, green building certification programs. These are just some of the skills that we need to collaborate together with, and I feel that it needs to be a stakeholder approach investment, because there's keen interest in industry partners looking at who they're dealing with in being involved on projects now.
Okay, yeah, thank you. And I mean, I would agree. I mean, it certainly seems that it certainly has to be a broad-based response. Max, so what about in Europe? I mean, you've mentioned sustainability, you know, quite a few times. I mean, do you feel that the skill set, it needs some work on it to sort of achieve some of the points again that Anne highlighted?
Of course, we can always get better. I'm really kind of approaching the business in a kind of like sportsman does. So always raising the bar high. So I would say that from Southern Europe standing point, still a lot to do. There's still a lot to do, and likely or unlikely or unfortunately, we are learning about ESG and ESG report for the World Bank, the European Bank of Investments, for large infrastructures, gas, oil and gas infrastructure coming from Eastern Europe, Russia, and so on and so forth. So it will kind of look strange, but at least from the perspective also of the company that I'm representing, We really started 5-6 years ago to make ESG report for large infrastructure, gas infrastructure in Europe. Now the big challenge we have is to apply these principles, this toolkit, to the major infrastructures, so the traditional infrastructures, and to the strategic buildings and assets which I was referring before. So if I could express in a kind of 0 to 10 ranking Southern Europe, so considering Italy, France, Spain, Greece, I would give a kind of 5.5 ranking in terms of number. Germany and Northern Europe, I would rate really 7.5. UK, from a certain perspective, really far ahead, and is a kind of teaching school. But this is progressing. We have really to onboard drastically and heavily the public entities in this perspective.
Okay, thank you for that. Well, that's interesting, Anne, for me anyway. I mean, I'm sure you're involved in it, but hearing that the UK is topping the rankings there is quite interesting. On the issue of social infrastructure, I suppose one of the issues that in my mind is always quite strong, and I suppose it's particularly relevant for me because this morning we released the latest housing market survey, the RICS market survey in the UK, and it confirmed what a lot of people are saying, that prices are booming, which is good for some, not so good for others. And I'm just wondering globally, this is the issue around affordable housing, and by affordable I mean all sorts of, I mean affordable ownership of housing, as well as affordable sub-market renting. So the whole gamut, getting access to the property market in one way or another. I just wonder whether the construction industry has anything to say about how this issue, clearly a big issue for many, possibly quite a divisive issue. And when it comes to the idea of inclusive growth, perhaps a really pertinent issue, whether the construction industry, whether the consultants who work off the construction industry have anything to say about this, whether they can help move the needle in a way that's positive. Because I'm quite concerned about where this is heading, and the divisions that result from sort of prices being so unaffordable for so many. Anne, do you have any thoughts on this?
I mean, I think that you have to look at this probably from a number of perspectives. So there's obviously a business perspective, and there will be some businesses that obviously specialise in residential. And clearly there are ways that we can make residential construction probably more productive, possibly more cost effective. Certainly we can improve the quality of it in terms of things like sustainability, etc. So there is undoubtedly a role that consultants can play in terms of things like, standardization, off-site construction, bulk purchasing, volume, scale, platform systems, all that sort of thing. But that is a relatively limited area of influence, I would say. I mean, it's not to say it shouldn't be done, it obviously should be done. But the much bigger area of influence is the market itself, and actually there is probably an economic argument to say that if we found a way of making the construction of properties substantially cheaper, would it reduce the price or would it increase the profit? And that's not for today, but that is an argument. So I would say that our influence in that area is important, but constrained. I think there is huge influence that consultants have in terms of things like city planning, in terms of, you know, areas that should be allocated for housing, in terms of inner city regeneration, in terms of alternative use for buildings, etc. And with a little bit of imagination, I think many of us either already are working on projects or could be working on projects that will possibly do things like change the faces of city centres and improve the amount of high quality residential, which, you know, obviously it's supply and demand. So if you improve the supply, then the prices should at least stabilise, if not come down. But then, of course, market factors come in, and whoever's funding it might not want a lot of housing supply because they might not want the prices to be suppressed. And so that brings in the third angle, which is the sort of public sector angle, whether that's through registered social landlords, through local authorities, etc. And I would anticipate, and I think we're already seeing this through various sort of regional plans and, you know, devolved administration plans and that sort of thing, where people are putting a huge amount of investment and thought into the funding of social housing in some shape or form, because that is certainly a way of taking the heat out of the market. And obviously consultants can be massively involved in that because, you know, again, where it should be built, how it should be built, how much it should cost, the way it's procured, we're very influential in that. And that could make a real difference. So, you know, at one level, the market will be the market, but at another level, we do have a really important role to play in all of this.
Thank you, Anne. Max, I mean, what about in Italy? I mean, I sense that the issue of housing is a big issue, but alongside that, I suppose we have the whole reshaping, and, you know, Anne's referenced there, potential reshaping of town centres, city centres, linked in part to, you know, obviously the digital transformation of the shopping experience. I mean, it may be a little less in parts of Italy than elsewhere. Italy still, I suppose, in Milan, I sense is probably still very much a sort of a strong physical market for shopping, but I'd be interested in your thoughts. But also the sort of the potential for offices to be used less frequently, so the demand for office space diminishing. I mean, how do you see that whole reshaping of cities and towns in the context of perhaps affordable housing, but just more broadly?
There is a massive reshaping. We started, I would say, 5 years later with the Reinventing Cities contest. 5 years later, from Paris and from other bigger city in Europe, and we are just coming to conclusion with really interesting and strategic sites just in the last days. Which means areas which didn't have a soul, and I really stress this point, a soul, which are rethought for having a soul and attracting young families to live and really having a quality of life. Of course, I think that everybody can agree that Italy is a place where quality of life is high in terms of climate, in terms of food, and etc. But this is not, of course, applies to big and really stressful cities like Milan, which might be compared to London, Paris, and so on and so forth. But what is really happening is a huge architectural, urban planning and social studies on how to create sustainable, new sustainable blocks, new sustainable neighborhood, and where sustainability is not just and quality of life is not just having a good flat, but is having services. Is paying not paying too much of general services in terms of asset and facility management. So one of the key things that I am really looking and I'm really observing also as a consultant in the market is as a huge effort in, for instance, in prefabrication, in a new way of building condominiums, building blocks, a much more important use of wood, much more important use of some experiments on 3D printed houses, where the key aspect is having, for instance, one room more for accessing to the connection, but having services within the neighborhood in a 1 minute stop. So there are 3-4 areas around Milan which are developing more than half million square meters, where they will have kind of laundry. It's just below your house. You will have a delivery center for the couriers, and you will have services for the third age, an independent third age. So these are the main ingredients of what is happening now, mainly in northern Italy.
Okay, thank you. And Tammy, I don't think anyone could dispute that Canada's a great place to live, but obviously, and the quality of life's good. But I mean, how about the changes that sort of both Anne and Max have been sort of talking about? How are we seeing sort of developments in, because we know that prices certainly in some of the big cities have been pretty on housing's been sort of pretty aggressive, hasn't it, for the price increases?
Yes, definitely. But we are seeing the residential sector having strong growth. There's rapid funding initiatives out there for affordable housing, but balancing like insurable, optimal quality, barrier-free design, inclusion of social and economics. So these are all items that need to be balanced. And I see that this is a role that consultants need to play in regards to reflecting back to the investors and the developers in regards to alternative approaches for materials, methods of construction, like Anne said, in regards to modular, and Max in regards to prefab. There's obviously like aluminum, cross-laminated timber, low-carbon concrete. All of these are factors that need to be considered now with the rising cost of raw materials.
Yeah, I suppose with the off-site construction, I suppose one of the challenges initially is around cost in terms of, you know, economies of scale. I mean, certainly I found that I was on the board of a housing association developer, or developing association, I should say, for 9 years, and certainly I was aware of two things. One, that sometimes prefab, certainly in the UK, had a bit of a reputation from the 1960s, and I think that there was a bit of a need to get people away from that image. There's an image thing, and I just wonder about the costs as well, because initially they're going to be, you know, it takes time to get the numbers down, or the unit numbers up, and the cost per unit down. Any I don't know, any thoughts, Anne, on that?
Well, especially, sorry, go ahead, Max. Sorry.
Max?
No, it was not me.
No, I think it was me. I was just going to say, I think the issue with scale is actually an issue of standardisation. And I think that the UK market is still trying to almost come up with what are the standard components. And I think that when we've got a much greater degree of standardization, which is coming, and I don't mean all houses will look the same, but I mean that there will be some common components, then I think that we'll see prices fall really quickly, actually. And I think we're getting very close to the cusp of that. The other thing that I would say, though, is that it's one of my real bugbears that, you know, it's not just the cost of construction, it's also the time of construction, it's the safety of construction, and it's the sort of sustainability of the thing that you've built. And certainly in terms of sustainability, in terms of quality, maybe even in terms of social value, then I think you can argue that many of the off-site manufactured solutions are actually better and perform better and actually perform cheaper over their lifetimes. And so I think that argument of, oh, well, it's too expensive, I think it's going anyway, because I think we're beginning to see some standardization scale. But B, I think they're often measuring the wrong thing. And, you know, if you look at whole life costing, you might come up with a different answer anyway.
No, good point. Good point. Now, I've got one final question. I'm mindful of the time. So our final question, now this came from a colleague of mine, in fact, at RICS, and I just wanted to throw it out there. He said, you know, COVID has obviously created some disruption and delay, perhaps not, you know, perhaps not as great as we might have envisaged, but it has happened. And there may well be some insolvencies down the road as a result. What are the best ways to manage these problems as we emerge from COVID? I mean, do you see that problem happening, or perhaps that's just too pessimistic? And what's the best way to deal with it? Tammy, should we start with you on this one?
Sure, Simon. In regards to insolvencies and the looming threat, well, obviously, looking at project timelines, deliverables, the construction timeline, and feasibility of certain types of projects. So considerations of constraints as we emerge from COVID are we need to mitigate scheduling delays, cost issues. So informed decision making and team approaches for alternative project deliveries, like different contract types to procure and develop projects, is a strong consideration for retracting against looming threats of these insolvencies, for sure.
Okay, thank you. And Max, what about, I mean, do you see this a problem in Italy?
Yeah, there is a strange thing happening from COVID. The good professionals are pushing back from good companies, and there is shortage of workers, specialized workers, and this will create a social gap in terms of really site worker, construction site workers. And this is might be the first goal to be set, honestly.
Okay, thank you. And final word then, Anne, what do you see about the, I mean, do you see this as a threat in the UK, insolvency, and is there an issue about how we, what is the best way to manage the problem?
I mean, clearly there is a threat of insolvency, although I would go back to say that the amount of government support that many construction-related companies have been able to take, things like VAT holidays and the furlough scheme, have probably massively reduced the threat of insolvency. So I think this time last year we thought it was, as an industry, a substantially bigger threat than it's perhaps turned out to be. The main issue in the UK continues, though, that will lead to insolvencies. I would say there are two issues. One is that there is a pent-up number of claims that have already been registered but have not been settled on site work that was caused through coronavirus. And I think that there is sort of in parallel to that, there is the general cash flow issue that most certainly people in the supply chain still suffer from, but there is a lot of action about that in terms of fair payment mechanisms, and certainly in terms of publicly funded jobs, there is very tight control now in terms of you know, where payment goes and how it should go down the supply chain. So I think it is a risk, but I don't actually think it's a bigger risk now than it was when we went into coronavirus, if I'm honest.
Well, that's a nice note to finish on, and I would just sort of reinforce the messaging just from this survey that the expectations have definitely improved, whether it's about workloads, whether it is about profitability, even if that isn't still strong, but there's been that shift, and whether it is about both the impact of COVID on productivity and on sort of undercutting on bidding as well. I think wherever we looked, there's sort of the feedback we've got from the survey, and we did get over 2,000 responses from this survey, and then on our commercial counterpart, which asks this not dissimilar questions, we got over 3,000, so we got 5,000 responses in total for the two surveys this quarter, which is now a typical figure. I sense that there is some good news story slowly beginning to emerge. And what strikes me is just how important this sector is going to be in driving what happens to both to the macro economy, but also to the component parts of the economy. Construction, infrastructure, and all its sort of allied professional services seem to me to be very much in the front line. So a great opportunity here to really show what the industry in its broader sense can do and deliver for the global economy. So on that positive note, I want to thank Anne, I want to thank Max, and I want to thank Tammy for their thoughts today. I enjoyed the conversation. I hope you did. There may have been a few questions that we didn't get to. We will sort of follow up on. All thank you very much for listening in all the same. And a quick reminder that we will be publishing a recording and a written summary of this webinar online. Of course, please feel free to share both of those with your professional networks. Now, we will have, and not unusually perhaps, an online poll when this webinar finishes, just to sort of get your thoughts on today's session. Please do complete it. I know it's a bit of a pain, but if you do, it does help us understand how we can make things or tailor things even more, align them or tailor them more closely to what is your area of interest. So as I say, please do take a few seconds to do that. I also want just to remind you, and you may have seen reference to this elsewhere, but the World Built Environment Forum Global Summit will be visiting Dubai as part of Expo 2020 Dubai in January 2022. And the week-long program will focus on the livable city, stable, smart, and healthy. To register your interest and to find further details of the program, please visit the website rics.org/webf. You can, of course, follow us on Twitter, Instagram, LinkedIn, where you can receive news of up-and-coming webinars and catch up on any that you may have missed. Finally, you can download the WebF app from the App Store or Google Play, where you can access the latest innovative global thought leadership content across the built environment. On that note, until next time, it just leaves me to say goodbye and thank you for listening in.